been an exciting weekend in the markets. Bitcoin is about 4,000 points from Friday or Thursday, and that's always fun if you're a Bitcoin holder, which I am. So it's nice to see those price gains, and there seems to be two main drivers right now. So one is what I talked about last time about Jay Powell's comments, and people are interpreting that as rate hikes are over and we might be in a pause period, but then the rate cuts will come and that will increase lending activity and increase economic activity. So that's one aspect. The other aspect is that there's been a bunch of press the last few days about fund inflows are increasing, and the general thinking is that this is in anticipation of Bitcoin ETFs being approved in the next month or two. So large players are getting positioned so that when the ETFs go live, they're expecting a market run and they want to be able to sell into that run, which seems likely. The SEC ran into some legal troubles over the last little while with their crypto cases that they have brought against different organizations. At least in one case, they apparently lied to the court, like deliberately, and misrepresented facts, and that's not a good situation to find yourself in. It's looking more and more likely. People are more and more expecting of these exchange traded funds to be approved. For somebody like me, it's difficult to accept the whole ETF approach because Bitcoin and crypto more generally, Bitcoin specifically, was invented as a reaction to the 2008 financial crisis, and how there's a recognition on whoever Satoshi was, and I think he's dead, by the way, but whoever Satoshi was, it was a technology developed to stop using the legacy financial system because it's completely corrupt, and I completely agree with that vision. By turning it into an ETF, you are taking all of the good aspects of crypto out of it, and it's just becoming another, speculative asset. So that's one aspect. The other aspect, though, balancing that out, is that there's a technological challenge. You need a certain level of technical skill in order to buy Bitcoin, sell it, and use it in transactions, and that applies to all crypto. And so by making it into an ETF, then you increase the accessibility of, other firms, other people. And the firms are the large element here because a lot of investment type companies have bylaws and prospectuses, and they can only invest in certain types of things. Typically, those things do not include over-the-counter digital assets. By turning it into an ETF, it's, now this is a regulated thing that we can buy. And so the thinking is that a lot of those will come in, and that's why people buy MicroStrategy. Michael Saylor tapped into this want on the part of financial institutions that they want to have exposure to Bitcoin, but they couldn't buy it under their own guidelines. So he turned MicroStrategy basically into a Bitcoin proxy by amassing giant amounts of it in the corporate treasury for MicroStrategy. And that was really clever. He was able to sell crazy stuff that I never thought I would see in the markets, as far as options and warrants and things that have really unfavorable terms. But those companies wanted that exposure, and that was the only place to get it. So if the Bitcoin ETF goes live, MicroStrategy might be a short. So that's something to think about. The whole thing got me thinking. It's nice to see Bitcoin over 40,000. That's fun, and I'm happy to see it. But it doesn't actually solve the problem. I talked the other day about your financial security layer consists of reliable assets and reliable income, and hopefully the assets provide income as well. And then when you have that set, then the financial stress goes away. So that's true, and it got me thinking a little bit about just the nature of money, because money by itself it's not useful at all. People don't want money, even though they might think they do. What they actually want is the things that money buys, and the stream of money providing a stream of goods and services into the future is what provides that psychological security. So while we enjoy this mini bull market, or possibly the start of a bull market, keep that in mind. I think that's the best thing to do, because at least in the last crypto bull market, I made the mistake of not selling anything, and I regret that. So I got too caught up in what that future state would be, and did not take enough time to recognize what is the current state as far as the things that money can buy. Now, with that said, I actually am a convicted believer in the cryptocurrency vision, in that by decentralizing the control of money, then we will eventually displace fiat currencies. And the fiat system, the US dollar, the euro, the yen, whatever currency you want to look at, there is no choice but inflation. The current debts and the way the whole system is built cannot continue unless there is inflation over the long term. Maybe in a year or two you can have contractions, but over the long term, no, it has to keep growing. And I learned, a guy posted on LinkedIn that Guinness, the guy who started the Guinness brewery, he signed a 9,000-year lease back in 17-something in Ireland, and it's for £45 a year. £45 back in 17 whatever is a lot, because that was actually pounds of silver back then. But as inflation has overtaken things, £45 a year is effectively zero, because the money has been inflated away, so the value has decreased. At this point, you could just prepay the next 8,700 years and just be done with it. And maybe you apply a little discount there too, a stream of payments going off into the future. So in the midst of market hype, let's not get too caught up in it. Prices go up, prices go down. What we really need to keep an eye on is streams of income and what their purchasing power is for the things that we actually